So what's the big problem with wealth creation? How do people like us, who didn't inherit a boatload of money, who are investing and building wealth from our own blood, sweat and tears, how do we invest in a way that gives us remarkable results and become financially free before retirement age? I don't know about you, but I am sick of hearing from wealth gurus and experts who don't walk their own talk and prescribe strategies that are a one-size-fits-all approach. For self-made people like you and me, I'm here to tell you that you don't need to be superhuman or already wealthy to reach financial freedom earlier than 65. This is the Alternative Investing Podcast.
Hey guys, welcome back to another episode of the podcast. I really appreciate you tuning in. This is a super important episode for anyone who is interested in commercial real estate, already investing in commercial real estate, or thinking about commercial real estate for the future. Now, a lot of people are looking at commercial real estate as the silver bullet or the solution to the cash flow issue associated with residential property. So just to give you a little bit of context here, a lot of people go into property investing because they like the fact that you can take small amounts of capital and leverage those in such a way that you get to control a large asset, and over time, provided you buy in the right areas, you can actually create a significant net worth of working capital in those sorts of assets. The big limitation and the elephant in the room for what the limitation around residential real estate, particularly in Australia and New Zealand, is around the issue of cash flow. If you are someone who wants to develop a significant or impactful income stream from property, it's not to say it's not possible, but it takes a long time. I know personally, and from having worked with hundreds of other investors, that even if you've been investing for 25 plus years, the cash flow in some circumstances can still be fairly paltry. And I say that from the viewpoint of meaningful cash flow. From my point of view, is really about developing cash flow, which gives you that freedom to just choose whether or not you get out of bed or what you do with your time. And so, in recent years, I've definitely seen a swing towards commercial property as another asset class which solves that cash flow problem. And I guess what I really want to say about that is that certainly 10 years ago, and even 5+ years ago, it was relatively easy to go out there and find commercial property with good enough returns to justify the other associated risks with working in the commercial space. Now, commercial experts will tell you about all of the pros of commercial property, and often what I've witnessed is that they mask or kind of play down the other risks that are associated with this asset class. One of the things that I really feel as investors, it's really important that we all do, is go into any new asset class eyes wide open with a very good foundation in terms of education. And what I'm witnessing these days is a lot of people jumping into commercial property, believing that it's relatively straightforward, that the cash flow is awesome, and then finding that actual fact, it just doesn't marry up, and in some cases creates a complete noose around your neck that for some people is easy to maneuver out of, and for others can be basically the stone that takes them to the bottom of the ocean. Why I think commercial real estate is a tricky asset class today is based on a number of things. First of all, who you deal with in terms of, let's say you go out and you use a buyer's agent. This matters greatly, and not all buyer's agents are created equal. There are a lot of people out there who have jumped on the bandwagon with limited experience or who don't really know their stuff. So that's first and foremost. If you're going out there, just make sure you know who you're dealing with. But the second part around this is I've spoken to a lot of people recently who are working with buyer's agents who are probably, I would say, micro celebrities. They're really, allegedly good at what they do. But because they've grown so big and they just don't have the resources, the care factor has really dropped off. And when I say that, often they're just scrambling to find any asset. Certainly right now, the commercial real estate space has been very tight, meaning there are more buyers out there than there are deals. And so I've seen a lot of buyer's agents present clients with deals that are maybe not in alignment with the goals of the client. So there's no question that commercial property has become flavour of the month over the last few years. I've certainly been seeing ads on Facebook, YouTube, everywhere around why commercial real estate trumps residential. You know, what I would say to you is there's an element of truth in that, but there's also an element of untruth. You know, commercial real estate definitely does come with its own bag of snakes, and you need to be educated on how this asset class works before you jump in. An example of this is commercial buyers agents will often talk about net returns. Now, I've had this debate infinitum with a couple of the good buyers agents in this space. And my opinion is if I were going to buy a business, for example, I would be wanting to know what are the profits after all expenses. And so when I say net expenses or, net operating income, I would expect that to reflect a number which is after expenses. Unfortunately, what has become commonplace in the commercial real estate space is a reference to net returns, but in actual fact, it's a net of outgoings for the asset itself, but before interest and, other commercial costs. So what I would say to you though is that I know a few people who've gone out thinking that something has, say for example, an $80,000 net income, only to realize that after interest, that $80,000 may become, sub $20,000. And, in a market where interest rates are rising, there's a lot of business uncertainty. There is certainly compression of commercial real estate returns happening. You're potentially finding yourself in a situation where, you could end up with an asset that doesn't necessarily perform in the way that you want. And, in many cases, the capital growth around commercial real estate works in a very different way. And this is where location and asset class, sub-asset class makes a huge difference. So, if I were to kind of draw on a couple of stories that I could to reflect this, I have a client who was the recipient of quite a large portfolio of commercial property, really great commercial property, A-grade commercial property. As it goes, one of the properties was very large, went vacant, and for 3 or 4 years they simply couldn't find a tenant. It was well located, and frankly, I think part of the issue with this asset was the fact that the property manager that they appointed wasn't really trying all that hard to put someone in there. And in my opinion, your property manager, when it comes to commercial real estate, matters greatly because, you want someone who's going to almost go door knocking to put a tenant in there for you, or who knows the market well enough that they're always on the front foot as far as, if you were to have a property go vacant, they've sort of got contingency plans in place. This particular person had a property go vacant. After 4 years, essentially the banks started to get very antsy, foreclosed on the main commercial property, and then started to foreclose on the rest of the portfolio because basically the other remaining assets weren't generating enough income to even cover this primary asset. And in fact, just because of the way the finance was structured, everything was so intertwined that there was a question mark on the kids actually losing their homes as well. Fortunately, they managed to salvage that, but it certainly gave me a fairly bleak insight into where and how commercial property can go very wrong. A smaller, kind of less drastic example, if you like, is of a couple of clients recently who purchased commercial properties. They'd had the idea of commercial real estate in their head for at least 12 months. They'd engaged a buyer's agent, they'd committed the fee, and so they felt, obliged to follow through. And 2 of them have ended up with commercial properties which since acquisition in the last few months have experienced interest rate hikes, and the cash flow has, net after all expenses, including interest, dropped from whatever level it was at to close to zero. Again, since for each of these clients, the play was definitely around trying to boost cash flow. They're now in a delicate situation where, yes, the asset's holding its own, but there's a question mark, number one, around, the viability of the tenants long term, as well as, a real frustration that the asset isn't giving them what they want and is, again, not that easy to sell, particularly in the current environment. So I just want to put a nice, neat bow around this. I think a lot of people are going to or turning to commercial real estate because they want to solve their cash flow issue. In an environment of uncertainty, high uncertainty and volatility that we are in right now, cash flow or cash flowing assets where you can make predictable income is really the gold in the current market environment. And commercial real estate, the song sheet that commercial real estate professionals are singing from implies that the commercial real estate market solves that problem. I would actually put a question mark around that, and I would caution you to, if you are going to, look at commercial real estate, to be really vigilant, number one, about who you're investing with, and second of all, whether or not they have your best interest at heart. Are they really taking the time to understand who you are, your risk profile, and the sorts of deals that are in alignment? As I've pointed out already, the three big I think red flags are, number one, the rates of income stream, the yields are quite compressed right now. I think the flurry of activity over the last 5 years has forced, the market to kind of, prices have risen while income streams haven't as much. So yields are quite compressed. We're definitely in a state of uncertainty around interest rates. So interest rate rises could quickly erode the cash flow that you do have in terms of positive cash flow. And then the third thing, and this is based on, seminars that I've been to recently, reporting on, the ATO's view of debt collection and the uncertainty around business, means that, there's definitely some vulnerability for small businesses when it comes to this, volatile exchange rate, volatile interest rate environment. So those three factors combined leaves me feeling very nervous about this asset class. And let's say after interest right now, you're earning 2%, I think that could quickly become, zero or even negative if the banks push you to a higher principal and interest repayment schedule, or if the market sneezes and interest rates just go up. So guys, I don't want to be a doomsayer, but just tread carefully. I'm certainly not saying commercial real estate doesn't present great opportunities, but I am saying that don't believe the hype, and make sure you create a list of characteristics that you are looking for and that you will not compromise on before you commit to any real estate deal in this space. So anyway, guys, take care, and I look forward to catching up with you next time.
You've been listening to the Alternative Investing Podcast. If you're feeling frustrated that despite doing everything right in the property investing playbook and you're no closer to financial freedom, then head on over to incosiwealth.com to learn more about how you can use alternative investments to catapult your investing income and blend strategies to shave decades off your timeline to financial freedom. See you on the next episode.